All right. Good morning, everybody. Got a lot of Fed speakers today, including Powell this afternoon. It's very likely that will be the biggest thing on the table, and it could be what the market has been waiting on this week. I also noticed um, Unusual Whales sent out a tweet on SMH put buying that came in earlier in the week. And that could be another reason why we were going sideways. If somebody knew that tariffs were going to be coming out on uh, semiconductors, on chips, and that there was going to be more headlines in that space, then it could have been a hurry up and wait till we got the data, right? The other shoe to drop. Either way, short week, holiday week, the expectation is that we go sideways unless we get headline news. And with the things on the economic table, the typical events that we had so far this week, none of those would account for the pause. None of them are big enough to be wow events. So with Powell today, it's definitely something we want to take a look at. And then we have OPEX tomorrow. OPEX is always something worth keeping track of. VIX expiry this week, with the correlations between the S&P and the VIX in a down market or a bear market. The VIX is really important in this context, in this environment. And so that could have some impact as well. But the main one, I think, today is going to be Powell. We got Hong Kong Green. Yeah, I mean, we do have events, right? We got retail sales, and there are others, but they have limited impact in the face of things like Powell, tariffs, right? Headline news that aren't connected to the typical economic event schedule. So it gets to the point where we start to weigh which is more important. And I would never deliberately ignore data, right? That's just not my style. So I won't say something's irrelevant, never. But if we look at what the markets are worried about, I would say that Powell speaking at 1:30 has a lot more weight to it than retail sales. And of course, headlines on chips are going to dominate the morning before we get to Powell this afternoon. So could retail sales throw us for a loop? Yes. One of the reasons I'm willing to believe it won't be that bad is the forecast versus previous. Now, if this number misses, well, we could see some fun this morning. If we're in line, then what's the wow, right? If 3 is what we had and 3 is what we get, then turns into a nothing burger. So definitely 8:30. We do have economic data on the table 9:15, which is a little odd, right? We don't normally get a quarter hour event, but there are events on the quarter. 10 o'clock, noon, and then 1:30. This evening, if you guys are trading in the after hours or the Globex tonight, definitely want to keep your eye on the clock as always. Most of the traders that I know that trade in that time frame, we've had the talk. We've already discussed what you should be looking at if you're trading in the evenings. So that shouldn't be a surprise that you want to know what's on the table. It is Wednesday, so we're going to get crude data. It's every Wednesday, typically, unless we have an economic event or a short week. So this week is a short week, and that can throw off where we get our crude oil inventories. If we were gone on Monday, but we were going to be here Friday, a lot of times you would see this report show up on Thursday with nat gas. They'll just pile them together on the same day. Since we were here Monday, but we're not going to be here Friday, we found it today. I wouldn't be surprised though, even though it's showing here, if we get to 10:30 and we don't get that crude report. I've seen that happen where they list it and then we end up getting it tomorrow anyways. So just be kind of mindful of that if you're trading crude. I know it would seem like with the amount of money that goes into the trading world that situations like this could never happen, right? That if it says we have an event today, well, gosh darn it, we should have an event today. But you would be surprised at how unorganized and screwed up everything is. And so even though it lists the event today, don't be surprised at 10:30 if we don't get that event and it ends up being tomorrow when we get gas. If we do get it today, don't be surprised if we get nat gas today with it. Because again, it is a short week. And when we have a short week, that screws with nat gas and or crude. We have the 20-year bond auction today also. Pay particular attention to that one. It's one of my sweethearts right there, the 20-year. I would never say that any of the auctions don't matter or that one auction matters more than another. But I do pay particular attention to the 20-year. It's worth keeping on your radar. Some of the headlines this morning on NVIDIA seem to be just a reiteration of the same old, same old. They've already been restricting NVIDIA when it comes to China sales. You know, how much farther are they going to go with that? And then that headline on going up to 200 and something percent on China. China has already made it clear that any more increases like on the tariffs are just going to be ignored because they've already priced it to a point where China is just offsetting the entire, what, 3.5%, 4% of GDP that comes in from US. So they've just discounted that and they're looking for it somewhere else. There's nothing else they need to do. So the administration could take it up to 500%. China's not going to care at this point. Whatever. Put wall underneath us. Zero gamma volatility trigger and call wall still overhead. We didn't get the AM edition before I started the stream. Checking on it now. They published as soon as I went live. So when I'm done, I'll get it shared out. We're still hovering around the 10, still have the 20 over our head. As we sit here, just going sideways, it gives that 20 time to come down into the 10, and then they're going to merge if we're still sitting here. If we look at it on the daily, you can see that downward slope. It's going to continue to come down as long as we continue to hold the range. We had this 2-day sideways narrow range day to NR2 because, you know, NR1, NR2. Narrow range days typically precede very large expansions, right? We had 2 very narrow days here. Then we started the expansion, which was a bit of a fake out before we really took off here. The more narrow the range, the more explosive the takeoff can be. And there's no bias to this as for an upside or a downside move. The ranges that we saw yesterday, if we just go back even a couple months, we'd find that that was a normal size day and a decent day in any other environment. But we're in an environment with a lot of volatility, a lot of movement. So these 2 narrow days really stand out. They are at an important level. It's a key inflection point. This could be the raid just like back here. Where we had the draw, the raid, and then the real move. So this could be the raid, and then we end up with the real move going the other direction, or this straight up could be the move. We want to focus on the last big bar closest to price. That would be this bar here, 410. Market's mid. 53.38 if you want to just round up one tick. If we cut below that half, we can expand this to the next range. And really, if you're going to do this, you may as well just do the entire thing, right? That 51.75 for a nice round number, or a nice simple number. So level by level, if we break 410's midpoint, we'll focus on the halfback of this entire leg up. Today's floor pivot is basically in line with yesterday's floor pivot, no edge there. Price opened underneath it, which is bearish. We haven't hit today's pivot point, which tells us we've got an 80% chance of going up there and hitting it, since that's what we would do 80% of the time. It's a little wider than yesterday, which would imply that if we broke out, it would not stick and we would come back in again. But if we compare the width of that to, say, something like Monday, which was a lot wider, then this really doesn't look all that wide. It's all in perspective. And we are already broke outside of the range. We've gapped out of it, actually. Then we ran back up, tried to get back in it, wasn't able to keep it, and was kicked back out again. So we've had some explosive moves. Even this morning, this move here creates a little bit of a liquidity gap, 53.50. Unfinished business would be another way to consider that we may come back down to this level just to get that liquidity gap closed. The move happened after the kill zone, by the way, right? It was after 4 a.m. when we got that move. We do have a gap that needs filled in the RTH. So if we was to go back to the 4 o'clock close, let's just do it on the daily. A lot easier to mark the close that way. So we got to get up through that line. Now we've hit it, so we could consider it a gap already closed. I'd want to get through it, get on the other side of it. And there are analysts that will say, well, it doesn't count because it did it in the pre-market and it needs to happen in the RTH. I'm not really in that boat. I think if we had gone through it, then it'd be closed, it'd be done. It is concerning, though, that in that push, it ran right up to that close point and then stopped, as if that work is done, it's finished. $52.50 is the week's floor pivot. So if we break our own Globex low, that's going to be the bigger target. To hit the upper ADR today, we would have to run all the way through yesterday's price action, break out of yesterday's high, and then hit the upper ADR. While that's technically possible with headlines and Powell, and we could get some juice that really pushes us through all of that. It's unlikely that we would see that just from an economic headline like retail sales today. It's going to very likely need to be a big headline that really juices the market and pushes us through all of that trash. Otherwise, that's off the table, and what's left is going lower. We hold the line and don't hit either side, or we hit the low and it holds. We break that and we go to the next level. The ADR is still compressing, right? It really expanded over the last 2 weeks, and now it's slowly starting to compress again with these narrow range days. But it is still really wide, 188 points, 3.5%. So with the average daily range at 3.5%, these two sideways days really stand out from how narrow they are. If we're beginning to expand, a 3.5% day is nothing. That would be these red lines. Going 3.5% in one direction would be the yellow lines. So we can easily get to 5,200 today and really not do anything outside of the norm at that point. That would just be a typical Wednesday. We don't have a lot on the distribution at this point. We were working on this compressed P-shape profile. Or if we back it up, we had this really nice D shape with a almost textbook centered point of control. Now that we've gapped down, we've started to add a tail to this, but we're not leaving much behind at this point. $54.22 is the value area low, which is just below that close line that we were focused on. $53.92 is a cog line, by the way. Just adds to the level that we're at. And 54.18 is the 3-week moving average also. So we've got the 20-day moving average, the 3-week moving average, the 10-day moving average, our own Globex open, yesterday's close. Then we've got the options levels up there to deal with as well. All right, we got the point of control moved on the 10-day 30-minute. It was up here in the 5,700 area. Now it's down here in the 54 area, 54.5. We talked about this earlier in the week, so this move down is not a surprise. We were hoping to be centered around this point of control or maybe even above it. That would have been the best case scenario. Instead, we gapped down and we have that sitting overhead. As long as we continue to hold around this thing in a range or a zone, then it won't be too bad. But if the zone was really narrow, we've already left it. If it's bigger than that, then we're still in it. But we don't know how big it is until price comes up off of this low or goes lower down, because we didn't spend a lot of time there yet. As long as we hold around that thing, it's not going to act as support or resistance, and we'll be able to cross through it back and forth, no problem. But once we leave the range, if we then try to come back into that range, it will act as support or resistance depending on which direction we left it from. So unfortunately, we now have the point of control a lot closer to us and over our head. If you think about a way to put this into an analogy, if you're swimming in the pool and you don't have anything to push off of, then sure, you can move in whatever direction you want. But it sure does help if you can push off of something first, the side of the pool, the bottom of the pool, something. So having this point of control brought down to us and having it over our head, one little rally back up into that to have something to push off of for a move lower could get us moving to the downside strongly, nicely, nice and clean, swift. We're not going to expect to see this point of control move anytime soon. It's going to take days just to begin getting into the candles that made this point of control. And the first set of candles is 2 days away, and we've cut right through that area really fast. We didn't leave much behind at that point. So we're looking at more of like 2 weeks to get into these candles, and then now over to here. And so the only other thing that's going to move this point of control is if we build out a new high volume zone. If we look at what we've already got, that implies 5,300, but we would have to get down there and then build this zone out more. We got a new VPOC from yesterday. $54.32 cog line. So if we attempt to get through yesterday's point of control, that's going to be another struggle point, which we already would have known that it's a cog line, so it's not a surprise. No real insight from today's structure so far either. All right, we're still below the 10-week, close to where we have been, minus 3.5, 3 3/4. There's been times where we've held this kind of range from the 10 without going back to it and without really getting a lot worse. But generally, we just tend to work in a wave where we go down and then we come back up again. The concern is if we don't come back up all the way and we end up making another leg lower. So we made the move down, came up, made the move down again, came up, and then made the move down again. In price action, that was it set a low, a lower high, a new lower low, a new lower high, and a new lower low. And we've been talking about that same scenario with the current market, how we've got to continue to evaluate the price action we've got, looking for a higher high, and a concern that we may get a lower low instead. barely below the 10-day, still within the range, 0.5% above or below. Just puts us in that magnet zone like gravity. We can chop back and forth above and below the 10-day. No real benefit. It's not supportive. It's not resistance. Nothing like that. And it's not a surprise that on both of these time frames, we're not overbought, we're not oversold, we haven't moved too far too fast, we're not extended to the point where it needs to mean revert. But we didn't really expect that anyways because we haven't done anything over the last few days. So we got gold, gold miners, airlines, energy, metals and mining, and that's really about it. Oh, and the VIX, of course. That's really about it. Everything else is either not moved enough to hit our benchmark or it's down this morning. So chips lead that downside push. I'm just using SMH as the proxy. And behind that, we've got the Mag 7. And more generically, we've got tech. The China group is also down. KWeb kind of represents China tech. So Baba, Baidu, those guys. Nat gas, which, whatever. More China, expanded tech, and really these lower ones, they're just not down enough to meet our criteria. This is a real hit to the growth versus value measurement that we've been focused on. And it wasn't necessarily to say that growth was doing good and value wasn't. It was just that growth was outperforming value. And now looking at what is really getting hit today, chips, tech, that's really going to change the dynamic. We can add to that the move that we've seen in the dollar. We had that initial spike above 100 yesterday. Then it reversed course, took out the range that it had built, and now it's underneath it, just like the ES is. And the 10-year, without getting that upside push first, is also down below that range that was built. We're starting to sync up. Correlated market moves are more dangerous and more violent. So this is a little bit of a tell that when we move, it could really move. Now, if you've read that white paper from Volland, where they talk about spot vol correlations and how important the VIX is in conditions like this, and how we can use that with the S&P to kind of gauge what's going on or where we're going to go next or what we need to break down to break out, what to expect from dealers if we do break down or break out, then you kind of get the idea that right now you got to keep your eye on the VIX. It's still a big deal. And it's not to say, well, the VIX is going up or it's going down. It's more about swag levels. So if we have the ES today breaking this low that we made in the Globex and continuing to go lower, we would want the VIX breaking this high that it made in the Globex and going higher at the same time. If the ES gets down here and tries to break out and the VIX isn't even at this high yet, that breakout is likely fake. If the VIX gets there first and breaks out, it's probably a warning that the ES is going to follow to the downside. Right? It'll be a leading indicator. So we can look at that and say, sure, 33.5. If the VIX gets above 33.5, we're likely going to see a continued sell-off in the market. But it wasn't because 33.5 is some magic number, right? It's because that just happens to be where the Globex high is right now. And it matches opposite of the Globex low for the ES. And 53.40 is the level that we don't want to see the ES break down below. But if we do, keep your eye on what's happening with the VIX. It's not always going to be this way, but in the current environment, when we're in a negative environment like this, or back in 2022, this is how the game is played. So keep your eye on the VIX, keep your eye on the dollar and the 10-year. Of course, treasuries are important, but the last one would be headlines. We've been waiting for something for 2 days, and it's easy to say, oh, well, it's a short week. Nobody wanted to participate, and so we just didn't get a lot of activity. I might believe that if this was 4th of July weekend or something, middle of summer, everybody's gone. We're not in that environment, right? And the overnight volumes have still been significant. So they're here, they're participating, they're waiting on something. And I don't think they're waiting for the end of the week. So what are they waiting on? Maybe it was retail sales, which is important. And the number could be off today and we could get a big move at 8:30. Or it could be Powell this afternoon. So that's what I got for you guys this morning. Be careful, be safe, watch the headlines. See y'all tomorrow.